Welcome to our channel. If you own rental properties and want to maximize tax benefits, follow these step-by-step instructions to create powerful tax advantages from real estate investing. Step 1. Claim all rental expenses including mortgage interest, property taxes, insurance, repairs, maintenance, utilities, property management fees, and advertising costs. Step 2. Maximize depreciation deductions by depreciating the building value over 27.5 years for residential rental property, significantly reducing taxable rental income. Step 3. Conduct a cost segregation study on properties to accelerate depreciation by identifying components that qualify for shorter 5, 7, or 15-year depreciation periods. Step 4. Qualify as a real estate professional if possible by spending over 750 hours annually in real estate activities, allowing you to deduct rental losses against other income without passive loss limitations. Step 5. Use the $25,000 rental real estate loss allowance available to active participants with modified adjusted gross income under $100,000. Step 6. Implement a 1031 exchange when selling rental properties to defer capital gains tax by reinvesting proceeds into like-kind property within strict timelines. Step 7. Keep properties until death to pass them to heirs with stepped-up basis, eliminating accumulated capital gains while retaining depreciation benefits during your lifetime. Step 8. Document short-term rental activities carefully. Properties rented for 7 days or less on average qualify as non-passive businesses with unlimited loss deductions if you materially participate. Consult with a CPA specializing in real estate taxation. Don't forget to like this video and subscribe to our channel.